we're live on Facebook, we're on the radio, we're on the Zoom call. So we're basically everywhere for another Thursday edition of Not Your Average Investor Show, Rental Income Property of the Week.
Week.
And I'm not Pablo Gonzalez. I'm Isar Maitis. I'm Pablo's partner. And it's my second time doing this. So now I feel really at home. I did in the first time as well, but now I feel even more at home. And let me tell you a bit where Pablo is. Pablo is in Cleveland, Ohio, in 20-degree snowing weather. And I'm pretty sure that he would rather be in the air-conditioned 76-degree weather in JWB's studio, right?
He was sad. I was talking to Pablo this week and he's like, man, I have to miss the show. I have to miss the community on Thursday. This is like his shot of endorphins through the week. So we're missing Pablo. I know all of us are missing him and he's missing us. But you know, we can hold it down as a community for a day here without Pablo. We're stronger. We're stronger than we look. So we can hold it down.
We got this. So with me is my amazing co-host we like to call GC, because he introduces genius concept, because he generates cash flow, because he's a great co-host, because he's a golf cuckoo, and because he runs a great company, and because his name is Gregg Cohen. Gregg, how are you doing today, my friend?
I'm fantastic. Great to be with you, brother. Thank you.
And with us, like I said, is Joel Almosara. Joel is from Texas, but he's been around the block several times because his background is the military. So he's been in multiple places. And because of that, he has a very unique experience on his real estate investment. First of all, because he had access to VA loans, which most of us don't. So that's a unique benefit. But also because he had to move around and because he retired relatively young compared to most people, because he's been in the military. So he has a very unique story to tell that we're going to jump into later on. Joel, how are you doing today, my friend?
Doing great. Doing fantastic. A little busy, but it's always great to be busy. You know, being in the military, you're 24/7. That's your your hours, and getting out and not doing anything is not a good thing. So I'm back.
Awesome. Being busy always beats the other option, right? Of being bored.
Right.
So, you know, if you want to know about owning rental properties in your investment portfolio, you are in the right place. If you want to know about best-in-class property management for rental property investors, you are in the right place. If you are a real estate professional and you're looking for an edge in the Jacksonville market, you are in the right place. And if you want to learn more on each and every one of these topics, you can get a free private consultation call, and it's very easy to get to. All you need to do is go to chatwithjwb.com, and one of the professionals, advisors from JWB will be glad to help you with each and every one of those. And now for our amazing audience, we're going to do the roll call. And now we have a tradition, right? Because it's the second time, it's a tradition already that Gregg gets to do the roll call. So Gregg, are you ready for this?
I think I'm ready. I've got big shoes to fill. I'll tell you, when I went to bed last night, I'm kind of thinking about the next day. And the thing that I was probably most nervous about is right here, right now, doing the roll call, not screwing it up. Before we kick off the roll call here, I want to say a special thank you to Joel for your service. Military man, thank you so much for your service now more than ever. And for all of our military professionals out there, we appreciate you and love you so much. Thank you for taking care of our country and keeping us safe. And with that, I'm going to kick it off by saying hello to Madison, who is our community manager here. Madison, how you doing over there?
I am doing pretty good. Can't complain.
What's the best thing that's happened to you so far today at JWB?
So far, oh gosh, every day is a good day here. So I think just being able to be in here, unlike Pablo, a little shot of endorphins here, hang out with the crew.
It's always fun. It's always fun. And of course, Madison is here for the group, for the community here. And so we are super thankful to have you, Madison. But let's kick off this roll call here. We've got Lee Bishop, who is the MVP of the Not Your Average Investor community. Thank you so much. Lee says,
MVP.
We have Leo, who says, good morning, y'all. We have Nadeem. Nadeem will be hosting our next Not Your Average Investor community meetup in Seattle, I believe. Is that right, E-Star?
Yeah.
We have that in Seattle. And Nadeem says, hi, everyone. Good morning and good afternoon. Noah Rendari says, hello, everyone. Noah recently put, I believe, 3 homes under contract. If I'm mistaken on that, Noah, let me know. I know it was at least 1. I think it was 3. Maybe put that in the chat. But congratulations on your recent investment and becoming a JWB client. We're happy to have you. John Henning says, good afternoon, all. We have Johanna here, who is also helping with our community resources and management here. She, of course, says hello, everybody, and hi, Madison. We've got Bill Shields, who I saw at the JWB golf tournament last week. He said, Buenas tardes desde el soleado Duval. I don't know what I exactly said there, but I hope it was.
Sounds awesome. You got the you can fake the accent totally.
We have Andrew Barnhill, who says, good afternoon, everybody. We've got, let's see here. We've got Michael, who says hello from Virginia Beach. We have Dean Curry. Good afternoon from Columbus, Ohio. We got Denny Davies says, Buenas tardes. Bill Shields, your Spanish is just, infiltrating the Not Your Average Investor community. In fact, I'll share a little story with you all. I'm taking Spanish lessons as well. My wife's family is from Honduras, and I really desperately want to learn how to speak Spanish. And I told my Spanish teacher yesterday that my goal one day is to do the Not Your Average Investor show in Espanol. So hold me accountable to that goal. It won't be today. It'll be sometime.
And it will probably be with Pablo and not with me if you want to
probably
get
with Pablo.
any reasonable answers.
We've got Leonard Lee, who says, good morning, everybody. We've got Ken Moline, the patriarch of the first family of the Not Your Average Investor show. We have Michael from Northern Virginia. And man, you guys are just blowing up the chat. And then also just a heads up that this is Joel's first time being on the show. And he also hasn't really attended the show in the past. So if you guys can do a little bit of extra love and support, welcoming a new member to our community here today. It's never easy going on camera and sharing your story. And so let's just shower him with support. And with that, Isar, I'm kicking it right back to you, brother.
Awesome. Awesome job. If you're watching this either after the fact, or if you're listening on the radio, or if you're watching this right now on Facebook, come join us on Zoom next time. And it's very easy to do. Just go to nyais.com, which is notyouravageinvestorshow.com. And it will allow you to sign up and join us in these Zoom calls. And with that, let's go to the problem. Oh, you had announcements, right?
I do, but I can't do it unless, there you go. I couldn't do it. I couldn't share the news unless
about the announcements.
We had the trumpet. So I'm glad we have the trumpet now. I can do it. As always, I'm trying to keep you guys abreast of data points and information. JWB hires consultants to share not just Jacksonville market information, but across the entire country, because it informs us and helps us take care of your money better. So John Burns released reporting on rental rates across the entire country, the major MSAs. And so I wanted to share some of that with you, and then also sprinkle in a little bit of internal JWB data. Rents in Jacksonville year over year last year rose 10.5%.
Wow.
Just to kind of put that in perspective, we've never seen that before. And then I also did a little research with John Burns, and they showed us that historically, since 1985, the average rent increase per year in Jacksonville is 3.3%. Okay, so just some good data points for you all to know, right? On average, rents tend to kind of go up with inflation, and that's kind of what you see, right? That's why we call it a hedge against inflation. 3.3% is the rate since 1985 on average. Last year, 10.5%, the most that we've ever seen. And then internally, we also track what our rents have increased. And one of the things that we track that is most impactful to all of you as investors out there is how much does my rent increase when my resident renews? Or how much does my rent increase if the resident doesn't renew and we have to do a property turn and re-rent it? Well, so these are the numbers: 13.1% increase on renewals. So that means when somebody is in your home, they've signed a 2 or a 3 year lease. They then choose to renew again for maybe 1, 2, or 3 years. You still are getting a 13.1% bump on your rents and keeping your resident in the home. An unbelievable win. I do have to share with you, I do not expect to be able to do that every year or get anywhere close to that, but it is nice to just celebrate that fact there. And then for those that we can't renew everybody. We renew about 70% of our leases, but those 30% that don't renew on average, 14.5% increase in rents from the turn to re-renting it on the open market. So it is a wonderful time to be investing in hard assets, rental properties, because it is such a stable asset class. And then when you have these market dynamics that are working in your favor, where there's low supply, it helps to hold that asset and you get to enjoy a lot of the benefits, notably here, huge rent increases. So let's all celebrate and enjoy it. It's a good time to be an owner of rental properties.
So with that, shall we go to the property of the week?
Let's do it.
That's why we're here. If you're not here with us and you still want to get access to this, if you're watching this on Facebook or after the fact, you can go to jwbinventory.com and find this property over there. So let's beam ourselves to 10499 Autumn Trace Road in Jacksonville, Florida. So this property, it's a really nice townhome that has a purchase price of $250,000. It has 2.5 beds, 3 baths, and its expected rate of return, the ROI for conventional loan is 7.11%, and it's supposed to generate a positive cash flow of $146. So, Joel, what do you think when you see these kind of parameters? Like, what are the things you're looking at when you look at potential investment? And if you look at these parameters, what are the first things that pop into your head or that you're thinking about?
Every time I look at property, I always look at the return on investment. What I learned is it doesn't matter what the price of the property is. What matters is the return on investment, cash on cash, and cash flow. I think if I can see that it meets my criteria, whether it be a high price property or low price property, then I'd take it. But I'm learning a lot from different classes of neighborhood that I don't want to do. Some lessons learned.
It brings a tear to my eye when somebody looks at an evaluation and the first thing they talk about is return on investment. And I just want to celebrate you, Joel, for saying that. That's not normal, right? Normal people look at real estate and they say, well, let me first look at the picture. Let me first see if I could live in that home or if I would rent that home. Let me think about the color of the shutters. So it is beautiful to just simply first look at the numbers, right? This is not something that we are going to live in. This is not something that Joel is going to live in, right? This is an investment, just very similar to how he would invest in the stock market, right? He makes a decision based on the numbers of that stock, hopefully. Hopefully he's not in a subreddit group on Wall Street Bets or something like that, choosing on how to invest in the stock market, right? He's using fundamentals. Well, that's what Joel's using here in real estate, and that's why he's so successful.
So, Gregg, why do you like this property?
Well, I love this property, number one, because it is available. For friends of the show who've been following, you all have been asking me to show you more properties that are actually available. And so now the vast majority of the homes that I'm going to be able to show you on the show here on Thursday are going to be available because I pick them like within 24 hours of the show, which is cool. So it's a big win for all of us that this thing's available. And really just having a property that is available is a big win for investors right now. If you are investing in other parts of the country, it is very hard to find inventory that meets your parameters that's going to provide positive cash flow in a growth market. So simply having access to inventory that you don't have to go on a waiting list, or you don't have to wait months and months and months to put in offers and get rejected and then potentially go on a waiting list or potentially get a property accepted, is a big win. That's the first thing. The reason why I love it so much is that it's available, and availability right now, there is a very big premium to be paid for that, in my opinion. And the reason is because of what's going on in the interest rate market, right? We have already seen interest rates start to creep up, like we have been talking about and saying that they would for just about 3 months now. We accurately predicted that, and they are starting to creep up, but they're still extremely low. If you can put a property under contract that is available today, that can be closed on in the next 60 days, that means that you can lock in your interest rate today. And the property that is available today should produce higher returns than a property that's available in 6 months or 8 months, simply because we expect interest rates to go up higher than that. Again, if you're a fan of the show, you've seen us do some of the number breakdowns. A 1% increase in your interest rate decreases your return on investment by 33%. It took it from about an 8% return that we showed a few properties ago to about a 5.5% estimated return. So it really matters. So availability is something that should be held as a premium here. The other thing to keep in mind here is this already has a resident in place. I couldn't just choose one thing, Isar, that I loved. I hope that's okay.
I will allow it. I will allow it.
The resident has been in place in this home since 2017. When you have somebody who's already made that decision multiple times to sign up a long-term lease, renew a long-term lease, chances are that they are going to continue to be a long-term resident, and long-term residents are the greatest correlation to you winning in rental properties because it decreases your maintenance and your vacancy costs. So I love this one.
So a follow-up to what you just said, and I'm going to share the screen again so people can see it if they don't have access to it, is Lee Bishop said maintenance is a little high on the high end with 7.5%. Is that because it is a remodel with potentially more issues coming up? And he's asking, because of that, what was actually fixed during the remodel of this house? So great question, Lee.
Yeah, absolutely. I'll jump in there. So the way that, let's first talk about how we designate what the expected maintenance rate is. It's all based on data. Earlier this year, we updated all of the numbers. We tend to do this roughly annually, look at the numbers on the maintenance cost and the vacancy cost. And we also updated it based on some of the improvements, like, for example, the septic warranty program that has really decreased costs of ownership for rental property investors who own septic properties with JWB. So took all that into account. Also needing to take into account that, guess what? Construction or maintenance costs for rental properties are like every other cost that we see in the economy right now, which are rising, right? And so we looked at the historical data. We also looked at where we are going from an economic perspective. And then we put that 7.5% figure out there to make sure that we can hit that number so that we can show up and hit your returns on investment. What Lee is referencing is that last year, this same property would have had a 6% estimated return on investment, a 6% estimated maintenance cost. And so, Lee, I love that you're pointing this out. I love that you're on the show every single week and the MVP knows what the rates were before. So thank you for doing that. And now it's 7.5%. Well, that's just real. That's just real, right? That is more of a reflection of costs going up because of where we expect inflation to take us in this economy. We've also looked at historically where we've been. We've been lower than 7.5%, but I'm preparing you in advance that I think it's going to be higher because my job, again, is to take care of your investment over a full market cycle. And it's hard to ignore that cost increases are coming down the pike in all forms there.
So Joel, I want to ask you about this. Like you're now building homes and have a few rental properties. What are you seeing in this area of like cost of ownership and cost of maintenance across, because you have them in several different states? Share a little bit about your current rental property ownership so people understand a little bit more about your situation, and then relate back to this topic, because I think it's a great topic to talk about in this particular time in history.
Yeah, I think like Gregg said, you have to be prepared with the maintenance. Some of my property that I acquired is not newly renovated properties, and you learn from that. And inspecting the house before you buy it is really a must, especially if it's not newly renovated, especially nowadays where by the way, I'm also a realtor. Nowadays, if you buy a property here in Texas, they waived everything from inspection, from appraisal and everything, just so they can get the house. Because like Gregg said, I'm glad to hear that you have access, you have a property that's available, because that's it. I just did my 1031 and I was so worried that I'm not going to be able to get an exchange for my 1031, but gladly that I was able to do that. But yeah, maintenance is very important because that really matters when you are looking at cash flow. The more you maintain your home, the better it is for you in the long run. And I've seen a lot of places that tenants and landlords are not doing their job, a good job, that the house for the landlord is becoming to be really a rundown. And boy, that I had an experience that I spent almost 10 grand just because I didn't do the right thing the first time, letting somebody to just get in there and be my tenant. And another good practice is, if you are doing this on your own, like managing your own home, I suggest that you start rethinking that methodology, because I've done that before and it's not a fun thing. And I'm not a technician mentality. I'm an entrepreneur. And those little things, I may be paying 10%, but the headache and everything else that you are dealing with at the middle of the night, I don't want to deal with that. So that's why I really love JWB, because they are really a true turnkey. You just tell them what you want, you analyze, you do your due diligence, and if this is the property for you, get it. And don't wait, because it goes fast. And at the same time, they have an awesome, you guys have an awesome property management that really takes care of us, giving us all the information, the ROI, which I love to hear. And at the same time, long-term tenants. I have, being in the military, some of my properties are in the military area, and most of the military that my tenants are, every year they move. And so I always have that 1 month, at least 1 month vacancy, that I figure out, man, this is getting expensive.
Yeah.
So that those are the key things that I'm starting to learn, that the more you maintain your house better, the more you communicate with your tenant. And hey, even if they can't pay because of this COVID, even if they can't pay, it's better for them to stay there and give them some leeway, instead of just taking them out of the house or evicting them, which you can't do anyway. But giving them opportunity to do what they need to do. For me, it helps them to really think about how they're going to achieve their being a tenant in cases like the COVID.
Yeah.
And second, it helps me to keep that expenditure as far as maintenance is concerned. Because if you move a person out, now you have to do your cleaning and maintenance, and you pay the utilities, all sort of stuff, and then you start looking for a tenant. So, and that's where I really enjoy having with you guys, because I got the house, I got the tenant. That's like what you said, Greg. This house has already have a tenant. I wish I could do that, get that right now.
Yeah.
Well, you can. That's exactly the beauty of this show, that you can.
Yeah. So now I know when I'm ready to do it, because I just closed on a couple of them. I know where to go.
Well, that
Awesome.
sounds great. When you're ready, we're ready, Joel. But, I would love to just understand and maybe share your story a little bit more. We had the opportunity to spend a few minutes prior to the show, and I got to learn a little bit about your background. But would you mind just kind of sharing? And I loved what you said about how your first property, you went from your first property, but it's now turned into 6 or 7, and that you're from the Philippines and your military career. Could you give everybody just kind of an understanding of how you got here and how you're able to speak intelligently about a rental property investment? Because from what I can understand, it's been quite a journey for you.
It was. Yes, I came from the Philippines. I actually lived in a squatter area in the Philippines, and my home is open walls.
Wow.
If you've seen that advertisement in TV where it's squatter areas, I lived there. I lived that life for how many years? And so that I became a dreamer. I dream a lot. I'm a goal getter. And the military was my stepping stone towards the American dream. And I am a good example of American dream. From nothing to somebody. I think I'm somebody.
Wow.
I'm talking with you guys, JWB.
Amazing.
But being in the military, I've been in the military for almost over 30 years, and I didn't even know what rental business is, until just when I got out, 2 years before I got out. But because we have a VA loan mortgage that we can access, that we can buy a property without spending any dime. So that's infinite return, right? You buy the property, you closing costs and everything, it goes in your mortgage, somebody else's OPM, somebody's paying for it. So infinite return for me. But I didn't know that at that time. I didn't know what's all I know is I want a house. And so when I moved to Japan during my term in Texas, I let a realtor put my property for sale. And at that time, really, it's not seller, but buyer's market. So I didn't realize that my property has been sitting there empty and paying for mortgage for 6 months. I was in Japan, so I didn't really know. If you don't see it, you don't really care, right? And so until I really realize my paycheck is getting down automatically and say, where's this money going to? And I realized my mortgage. And so that's when I started calling for rental management properties. And that's how I started. And that house has birthed 3 more houses. And now that I think I'm mature or experienced now. If you want to invest with your children's education, real estate is probably your key in order for you to send your children in college. Because my house I bought for less than 100,000. It became almost 300,000 in 20 years. And so for me, I get that money, send my children to school, and I still have the property. What do you get about that? Instead of going to 529 plan, where you don't know whether you're going to have the funds or not. But this one is a tangible, you can touch it. When you're ready to do it, you can hit it. So those little things that I started thinking about now, going back, I wish I bought more. I can't do that anymore, but I am so really encouraged, inspired by young people when they're 18 buying properties. That's an inspiration for me. And I'm also a coach. I mentor a lot of young professionals. And when they do talk about investment, real estate is probably my number one topic when we talk about financial stability and financial freedom, because that's something that I have proven for myself. I'm not talking about, statistics. I'm talking about what I've experienced, what I've seen, and that's what I'm teaching my children right now. And just the fact that I'm an education kind of person, I want to educate myself and educate my family. If you again, I'm going to repeat, if you are a young person who's starting to have a family, if you want to have a little egg nest for your children, real estate is probably one of your best investment property.
Joel, you're really, really touching a nerve with everybody in the audience here. Your story is incredibly inspirational. Michael Santorios just said, what a true inspiration. Thank you for sharing. Thank you for sharing. I had no idea. Did I hear this right? You were living in a squatter community in the Philippines.
Yes. Yeah. Here's another thing, I went to college in the Philippines, University of the Philippines, and I was living in a dorm. And one time I went home during a weekend, our house was gone. It's flattened.
What?
Oh my.
Yeah, we don't have telephone, right? When in the Philippines, we were so dirt poor. And so our house was, when I went to our community, it was like, wow, it's like hit by a hurricane. It's gone. Apparently the government want to use the property for a school. And so I didn't know that. My family, I didn't have any communication with my family. So I had to look for my family.
Wow. That's crazy.
So it is. I lived that. That's why this is an American dream for me, that I'm a good example of that.
A few people in the chat asked, where are you from in the Philippines? Because first of all, a few of our team is in the Philippines right now, and a few people have been there, military service and so on. So
okay, if they're from the Philippines, they would know Tondo, Manila.
Yeah.
They would know what that is.
Wow.
Just incredible. I just think, to me, we have such a high quality of problems here in the United States, like a high quality of problems that we tend to sweat and get thrown off our rocker very easily. And we really lack the appreciation of others in other countries who don't have the same quality of problems, right? I think we're always going to have problems as a country, right? We're blessed to have a very high quality of problems that others in the world don't have. So I'm just so blown away by your transition, right? Like, to think now that you're sitting here and able to share your story with hundreds and eventually thousands who will listen to this show here, and to talk about your growth from living in a squatter community to having your home there one day and then gone the next day. to now owning, I believe, 6 rental properties. Is that right? Right? Across many different markets now, and then mentoring others. Nothing better than this story. This is really incredible. Thank you.
Lee Bishop is asking, Joel, if you own them straight outright, your rental properties, or are you using mortgages, or is it a mix depending on the property?
No, you know what I learned is OPM.
Totally.
All right, you got to
Yeah.
share what OPM is, because not everybody knows.
Oh, OPM is other people's money. Even now that I learned a lot that from just reading and attending seminars and conferences. At first, I didn't realize what the heck OPM is, and how can I get that? Nobody will give me money. But I realized that, yeah, it's out there. If you're an investor and you're kind of, it's very scary at first. You always hear, you start your business with zero money and you can own your property with zero money. It's like, I get blown away by those advertising, but it is true. If you meet the right people, if you meet the right organization, and they will educate you on the how to do it. It's not a fly-by-night organization. You will meet those people. And in fact, I have met a lot of them. And a lot of them, you're the one who's going to pick and choose who you want to use, right? And then you learn how to talk to the bank. In fact, I built, which I was telling Gregg and Izar, that I just sold my first new build because of COVID hits. I can't find any fix and flip, but I can find the land. And so I bought the land and built my house. And last night, I just got sold. It's about 75% complete construction, and it's already sold. And then even that house, I didn't spend a whole lot of money in that one. The bank gave me the money to build that house. So all I have to do is to put my face in front of the bank and say, hey, I have a very good experience, zero, building homes, but they gave me the money. And now I'm going back with them and get more money because I have 4 more properties, 4 more contract building that I need to build for this year. So it is, money is out there. You just need to find out where they are, and networks like this, guys, take advantage of this opportunity. This network is an amazing network. I know some of you are very experienced, but for you guys who are new to this field, this is the people that will help you build yourself, your business, and build that mindset. See, the thing is, it's all mindset. When you have this in your mind that you want to, and you believe, like Walt Disney, what did Walt Disney say? Walt Disney say, if you can dream it, you can do it.
Mm-hmm.
And this was a dream for me. Just building a house. Well, 2 years ago, I had no clue what rental, what OPM,
Mm-hmm.
let alone now I have built from nothing a house. It's just by dreaming about it. I dream like I want to become an entrepreneur. I want to become a developer. And I have no clue how to do it, but it was a dream, and I can do it. And it did. So like I said, I'm a good example of American dream.
I think you've removed all excuses from being acceptable for everybody who's listening to this as to why you can't make this happen for yourself. If you surround yourself with the right people and the right education and you invest in yourself, you can do it too. So we have reporting internally that we share with all of our clients. Joel, have you seen our client or ROI report before?
I did, but I don't know what it is look like because I haven't checked it yet. So busy doing other things.
I love that. About half of the folks that jump on the show as guest investors, who all of them are clients, half of them have seen it. Half of them haven't seen it, but they know that it's done for them. There's no wrong answer. But what I get to do is to do an even more in-depth analysis of your portfolio and your returns across all 5 profit centers. So if you are ready, then we'll jump right into that. Is that okay?
Okay.
Joel, the first thing that I wanted to just ask you about is for everybody who makes a decision to invest hundreds of thousands of dollars into rental properties in a different place than where they live, there is always a big motivating factor. It could either be a big opportunity that you see, or it could be a big pain that you are trying to avoid. For you, take me back to when you fully understood the model and you said, okay, now I'm going to choose to go and invest in Jacksonville or in your other places like Alabama and whatnot. What was the big motivating factor? Why did you make that very big decision to go outside of your market and start to invest hundreds of thousands of dollars?
It'll be really personal for me. It's not the money. It's my value is to add value to people. And I really want to help people. Because I started with when I was in the military, I was an airman. Isar would know that terminology, airman, no stripe in your shoulder. And nobody really tells you what to do about housing, right? So you rent the house, you don't have money, and you kind of just accept that, hey, this is all you can afford, whether it be a good house or not so good house, because you're an airman. You just do whatever you can do, you know. And so in my mind, I want to change that paradigm. I want to change that to where, especially young airmen or young couple that wanted to achieve their goal, their dream. I don't know if it's still an American dream to have a house, but I want to help first-time home buyers to get a home that they want. In fact, in my dream now, I want to put a subdivision, gated subdivision, just for first home buyers.
Wow.
They can enjoy that community where it's not so expensive, it's not cheap, but average.
Mm-hmm.
They can get in there with no problem. And so that's my dream right now. So I don't know when it's going to happen, but it's my dream. But I know when I dream it, it's going to happen. But my really goal is to help people. That's the bottom line. So if you probably need to notice that most of my areas are with military community. So that's kind of aligned to my vision of helping. And with I was just talking to my wife a couple of days ago, and because our dream both is to help people, and we said, yeah, I thought having a rental property will help one person, but building one house is helping a lot of people.
Mm-hmm.
From digging the dirt to the closing title company. And here in Texas, I can see how it helped, because a lot of our Mexican brothers and sisters are really working hard to make that happen. And it is, for me, it's accomplishment of helping people is what I'm really looking for.
Incredible. Thank you for sharing that. I've got to share with you, it's my favorite question to ask clients. It's like, why are we doing this? 99 out of 100 times we get these wonderful answers and motivations, and they largely are about doing something that is bigger than themselves. And there is nothing better than being a company that's helping people accomplish something that's bigger than themselves. Right? I like to be a part of something bigger than myself. My team, it's kind of a rallying cry. We want to be a part of something bigger than ourselves. When we get to be a part of your thing that is bigger than yourself, that's what makes it a joy to come to work every day. So thank you for sharing that. I'm going to break this down and make this a little bit more quantitative as well. We need to understand why we're doing this, and we also need to understand the numbers behind it. So Joel, I'm going to share this with you. Hopefully everybody can see the screen here now. This is the beginning of our buying plan. Every time a client comes on board with JWB, brand new client, before we even sit down and talk about investing in that first rental property, we're going to understand why, and we're going to break it down into a financial plan for you. And then we share that with you. It's on your report every single month. You get to see it. And so Joel, I don't know if you've seen this since you first bought your property with us, but this is the plan that was originally put together. We can see that your lifetime monthly passive income goal from your rental property portfolio. To accomplish that why that you shared, we built out at $7,200 a month. And then we break that down into the number of rental properties it would take to acquire that based on market conditions. And then we're going to hold you accountable to get there, right? You're at 1 right now, Joel, according to your goals. 9 is the target number of properties. And then we're going to look at the resources and the timelines and the market dynamics. And we're going to understand the year to achieve that milestone. Does this all look very familiar to you, Joel?
Yes.
All right. And we are well on our way there. Joel is a relatively new investor with JWB. And so you can see here now we're looking at his key performance indicators here. He's invested for a little under a year since he closed on his first property. His lifetime return on investment is 14.82%. And in that 14.82%, that is broken down between 3 of the 5 profit centers. It includes your net rental income, your tax savings, and your principal pay down. It does not include home price appreciation, does not include inflation hedging as well. So 3 of the 5 profit centers, and we're at roughly 15%. Of that, $951 of positive cash flow in his bank account has been delivered. That's that net rental income, and a total return of over $3,000, $3,074. The difference between the net rental income of $951 and the $3,074 are those other 2 profit centers. Principal pay down and tax savings really matter. In fact, combined, those have equated for more than the net monthly rental income coming in. And the main point here is there's a lot more to love about rental property investing than just positive cash flow. You got to look at all 5 profit centers, and we'll certainly look at the other 2 here in just a second that aren't included here. Joel, any thoughts here? Does this sound about right? And does this line up with why you made the decision to invest originally?
Yes, I think it's doing better than that, though, Greg.
Well, I'm going to get to that actually, but you're right. Spoiler alert. It actually is better, of course, when we include some of the other profit centers. And, one thing I should also point out is that in your first year of ownership, I'm sure we'll have some clients as guest investors on in the near future that maybe haven't owned properties for more than maybe 3 months or 1 month or 6 months. It is very normal that in your first year of ownership for you to be below expectations. It takes a little bit of time to hit your expectations because you have a tenant placement fee when your home is rented, and that happens right off the bat. And that's a cost, right? That's equal to your first month's rent. So it is very normal. We share this with all clients that it takes a little bit of time to get to your return expectations. Usually takes about a year. So for you to be at 14.82, that is overperforming versus your expectations. And largely the reason that that is possible is because we've had low maintenance and vacancy costs because you've had a long-term resident in place, like you talked about, and also because you've attracted more rent. We got more rent than we told you to expect. So this is starting off much better than normal. And it's really wonderful to see that success starting to happen early for you. All right. So this is Joel's property. This is his property, 8967 4th Avenue in Jacksonville. And as we mentioned, he closed in April of 2021, bought the property for $121,000. If you're in the chat right now and you'd like to buy a property for $121,000, give Joel some love because he made a great decision when property prices were 20% lower last year, right? We talked about how prices were going to increase. This was a great decision by Joel. You're not going to see another property at 121 right now because the market in Jacksonville is appreciated. But even beyond the purchase price for Joel, his interest rate is something that we need to pay attention to. Anytime you can get an interest rate and lock in your debt for 30 years on a loan and do it at sub 4% rates, that is even more impactful than getting a deal on the price because this gives you 30 years of wealth creation. So Joel, good on you for making the decision when you did. And for those who are considering right now, you still have low interest rates. It's a little bit higher than 3.75, but it's not that much higher. It's like 4.5%, which is still historically low. And your purchase prices are not going to be 121, but they're still lower today than we expect them to be a year from now. And then let's talk a little bit about rents. So this is that hidden value. I think most providers out there, and Joel, I would love for you to chime in here in a second and share if you've had this experience, but most providers that I see out there inflate rents as much as possible in order to produce an estimated return on investment that is as high as possible. You will absolutely see other returns on investment that are much higher in other markets and other providers than JWB. right? Our returns are between 7 to 9%. Others, you're going to see 10, 12, 14, 16. And you're going to say, well, Greg, why would I invest at 7 and 9% versus 16% over here? And there are so many ways that I can break that down and show you that it's not comparing apples to apples. You know, our mentality is to underpromise and overdeliver. It's one of our core values. One of the ways we do that is the rent that we expect to get, right? We're putting a rent number up there that we know we can achieve. We're leaving a little bit of room sometimes. We may be able to overachieve and get more rent. That's what we were able to do for Joel here. So on his
Greg, not only that the rent is over the projected one or the expected one, but it's not even 2 weeks that we got a renter.
Really?
Mm-hmm.
Oh, it's wonderful to share. So within 2 weeks of closing, you had a renter in place.
Yeah.
It's the way it's built right there, brother. That's awesome. So we had an expected rent on the property evaluation when Joel signed up in April of last year at $875. Within 2 weeks, he had a renter in place, and the rent that he achieved was actually $938. If we would have put $938 on the property evaluation, it would have bumped his returns up by like, I don't know, another 5 points or something like that. I mean, it would have had a substantial increase. When you increase $800 a year of cash flow, which is what this rent increase did, you know, it is substantial for the overall returns on investment, but we don't care about that. I care about bringing Joel on, hitting a return number that works for his goals, and then giving us a chance to beat it. That's how we get clients coming back to us. That's a little bit of the secret sauce for JWB. All right, Joel, let's take a look here at how this is performing overall. This is my favorite part of this. I hope you enjoy it as well, but we're going to look beyond just net rental income to look at all 5 profit centers. And the 5 profit centers, for those who are new, the 5 profit centers are net rental income, number 1, tax savings, number 2, principal pay down, number 3, home price appreciation, number 4, and number 5 is inflation hedging. Many investors have cash flow blinders on. They don't look beyond positive cash flow, but that's not wise. You are leaving so much money on the table if you choose the wrong market or the wrong team that doesn't look at all 5. And so Joel, of course, chose the right team and the right market, and he's benefiting handsomely from it. So from net rental income perspective, Joel has earned $951. That's money in his bank account. Income minus expenses, almost put about $1,000 in his bank account in less than a year. His total tax savings, this is money that Joel doesn't have to spend on taxes on the gains that he's had, whereas he would have had to spend that money if he had another asset class. If he was in the stock market or another asset class, he would have had to spend that money. Saved almost $1,000 in taxes, $905 to be exact. Principal pay down. This is the resident paying your loan down for you. Joel's resident has paid down $1,217 of his loan for him. So whereas it doesn't hit his bank account every single month, Joel, do you enjoy seeing your loan balance that you owe being paid down by somebody else?
Oh, yes, definitely.
I think it's probably the only thing you love more than OPM, than other people's money, is when you borrow other people's money and somebody else pays that money back.
I think that's the only reason why I want to have a paper mail, you know, they mail your mortgage so that you can just open it up, look at, hey, they're paying it down.
Exactly. It's a beautiful thing. And then we've got home price appreciation. Now let's be serious. Joel picked about the best time to invest from a home price appreciation perspective, right? The fact is we appreciated 20% from last year till this year for Joel's property. And so clearly he has been a big winner. I want to take one step farther and not just celebrate that fact, because I've been investing long enough to know that over time, this home price appreciation is going to perform very similarly over a full market cycle, just like the last market cycle did. And so while some may say, well, geez, Joel just timed the market perfectly, that's why he's earned such a high return on investment. It's not really the case. Joel's going to hold on to this thing for a long time. Over time, market's going to appreciate just like it did the last 20 years. It'll appreciate around 4.5%. The historical average in Jacksonville is 4.6%. And home price appreciation will still be a big factor in his overall return on investment. So congratulations on seeing that home price appreciation number in Joel and starting out on such a positive front there. But all of us, don't get too excited, right? We're not going to see 20% of home price appreciation every single year. It's going to mellow out again. That's what it does. And then lastly is inflation hedging. Inflation, the biggest thing to know here is that right now, the consumer price index is at 7.5%. That's what the government measures inflation. That's the highest it's been in 40 years. that is eroding wealth. If you have money in a savings account right now, it is eroding that wealth. You have to put your money in other assets that go up, that are a hedge against inflation, like real estate. And when we talk about rents going up at a really high rate and home prices going up at a really high rate, that's what I mean by a hedge against inflation. When inflation is 7.5%, there's never been a better time to invest in hard assets like that. Joel, before I get into your return on expectations and we have the big finale here, any thoughts on these 5 profit centers that I haven't gone into?
No, I think this is awesome. This is awesome to see. If you put it all together, I think that's where you're gonna blow your head out.
Well, let's do that.
Away. You're gonna be blown away by what's going on.
All right, I'm gonna do a little bit of a caveat here. Okay, I'm including home price appreciation because that's the method here. Joel has only owned this property for 1 year, right? In order to actually count on home price appreciation for a decision that you're making out there for your rental property portfolio, if you're not planning on holding for a full market cycle, 10 to 20 years, you should not be counting on home price appreciation, right? Joel's plan is to hold on for a long time, so we're going to include it here. But I don't want you guys taking this exercise and saying, oh, I'm going to go out and make a new decision to buy a rental property, and I'm going to expect 20% appreciation or any appreciation. If you're not holding for a full market cycle, I think you take it out of it's not a profit center for you. It's only for a full market cycle. That's what the data shows us. But with that caveat now being known, let's focus in on Joel's actual return on investment here. And here's the big finale there. Joel, when you made your decision to buy your first rental property with us, you had an expected return on investment of 10.92%. When you add in all 5 profit centers, your return on investment is 23.2% for your JWB portfolio. Congratulations, brother. How does it feel to make such a great decision?
I think, you don't see this when you're starting, especially when you're new. The only thing that you see is the money that you're putting for down payment.
Mm-hmm. And it's
right?
tough to make that decision. It's a leap of faith.
Difficult. It is very difficult. And you got to have, like I said, you got to have a little bit of trust in the system. And that, I think that helped me a lot when you're in a network with like-minded people, with education that pull you into that proximity of success, right? In real estate success. I think that helped me a lot in making decisions on getting a property, is because I don't have to go zigzagging in order to find out what's the right property, because I already have direct access to the people who knew what it is. They've been there, done that, have a t-shirt, right? And so I think with that, the trust that I have given you guys and the trust that you've given me, I think that is a big success for me. And I can't wait for getting more properties when it's the right time, and not the right time, but when the property is available, and my goal is in line with that. So
it's a beautiful thing.
Thank you. That's a great summary.
Well, glad you saw value there. It starts and it ends with trust. And I just want to say thank you for that. Isar, what do you think, brother? Pretty cool, huh?
I think it's amazing. Yeah. It's not the first time I'm doing this, but it blows me away every single time, right? It's looking at this like, oh my God, like it's all those hidden things that you don't take into account, like inflation hedging. Well, when the inflation was 2%, nobody really cared. But when it's 7.5%, that's, 1/10 of your worth is disappearing every single year. And the number is still the same number. You just can do less with it, which is, again,
it's like
people
a silent
don't
thief.
So exactly.
Like a silent thief.
So, Joel, first of all, thank you so much for your service. Thank you so much for your sharing. I mean, it's really an incredible, inspirational story for anybody, right? Because people are like, oh, I'm too old, I'm too poor, I'm too this. I'm like, your story throws all this to the trash. So just go do what you need to do. Go educate yourself. Go connect with the right people. And you can really achieve. I mean, you went from, like you said, nobody in the Philippines to now being a builder. Like this really blew. Forget about buying homes. I'm like, okay, if you can figure out somebody else's money, you can buy. But how do you build houses? That's really blows my mind. So really, thank you so much. And I really want to thank everybody in the audience. We still have, even though we passed the time, 33 people in the audience. Thank you, thank you, thank you. This really wouldn't be the same without you. Like this would just be, I mean, when it's just Gregg and me, we're really boring. Like it's really your energy in the chat and the community that really drives us to do this. So thanks everybody for joining. Thanks, Gregg, for really taking us through this every single week. And today it was really fascinating. And Joel, I can't even thank you enough. This was absolutely amazing.
Thank you. Thank you for the opportunity.
Joel, just echo that. Thanks again, brother. I really appreciate you spending your time and share your story. And I want to put out a special invitation to all of you. If you would like to be in the hot seat like Joel, this is something that we're offering to current clients, and just got to raise your hand. You can raise your hand and let Madison know now that you'd like to be included on a future show. We'll do this breakdown for you. We'll get to know your story and share your story. And then I've received, some folks are asking, like, are we only showing the really good returns and all that? So challenge me. Anybody out there, show up and jump on this thing. We, of course, will do a breakdown for you. The reality is that this asset class has performed so well over the last 10, 15 years, like it does over most 10 to 15 year periods. The returns look really, really great. I'm not just stuffing the box here. So I hope to see you all on the show in the future here. And thank you guys for being here, and we'll catch you next Tuesday.